Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come.
What's up, everybody? Welcome to the Wednesday morning edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Hope everybody had an absolutely amazing trading day yesterday. So we're going to do what we do each and every day, taking a look at 10 to 12 futures markets for potential breakouts and reversal trades. Quick reminder, tomorrow there will be no daily market commentary since we do a live trade room. So if you want to join the live trade room, go to TradersArmy.com today. Sign up for a free subscription. We're in our weekly, our 1 week preview week, so you get a chance to see what we do on our live trade rooms tomorrow morning. Jump in, join us. Be glad to have you. All right, so let's go ahead and dive right in. So this morning we are down about 6 points in the S&P, and yesterday was one of those days where I had anticipated a little bit of a bounce, and we didn't get the bounce, but it was it was a super tiny level that we were looking at. Yeah, I was even hesitant to add that level because it was so small. It was 28.96 by 28.97 half, right? It's like a 1.5 point level. And we actually did get a little move out of it, right? I mean, we got down to 28.97 and then popped all the way up to 29.03. So you got a little 2-to-1 move out of this little level. But then it came back down through, chop, 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 and then we've fallen over in the overnight hours since. So the markets have fallen off a little bit. When I go to the 4-hour chart, taking a look at my 4-hour, I can see that we're putting in a little bit of a healthy looking pullback. And we need some sort of a pullback, right? There's some sort of a pullback that's going to be necessary for us to have really good long opportunities going forward. So I'm kind of holding out on waiting for some good opportunities. If you want to go short, if you want to try to trade this thing to the downside, there's a little bit of potential for a breakdown. Right in here we've got this. The origin of this move up creates a zone right through here, which we've hit once. And we came super close to it. So if we were to base in here, you could maybe take a breakdown below that region, if you're so inclined. If you want to try to catch a reversal, you may get a little bit of an opportunity for a reversal somewhere up in here, if we're happy to get there. I'm not sure we're going to make it all the way up there today. There's the Australian market opens right in here. The European market open, another one where we've got a little bit of a bounce right there at the open, traded up to this region here, and now we're still kind of selling off. So I don't really want to force anything today. I'm going to hold off a little bit on probably most of what I'm looking at until I see, we get a definitive direction. The best short opportunity is probably somewhere up in here, or to take a break down below one of those regions. Now, in the Nasdaq, we are coming close to the level that we thought could act as Nasdaq demand. My problem is, look at what we're doing in front of the level. I said this, we had our live Q&A session last night. I talked about that in the Q&A session. People ask how often we update the live trade feed. And we update the live trade feed as trades show up, but it's not, there's not a team of people standing around updating the live trade feed after every market movement. You got to be able to know the rules around when to not take positions. And if you notice, this is true basing before a level, right? So true basing before a level takes that level and makes it that much weaker, makes it almost an invalid level because we'd have a lower probability of success coming out of it. So in my mind, this level is no longer a true opportunity for a reversal back to the upside. You may get a little bit of a turn if we get a pop higher. This is sometimes one of those ones where I think we could see prices come and pop a bit higher and then reverse back down. But I'm going to remove this level completely at this point. However, we could be setting up for a breakout to the downside, just like we have in the S&P. So keep an eye on that. Now remember, that's all lower probability. All of those trades become lower probability because our big picture is still going up. Our big picture is still bullish. So there's still lower probability, but you can get in for that next leg down, if you will, on the Nasdaq. Crude oil, we had a breakdown level, so some of you took the breakdown level. I was talking to some subscribers yesterday who said that they grabbed this breakdown level and asked about adding to the position. I guess the level is still moving nicely. If you took this trade, I would say take your stop, move it down here to 52.50. I think that's really the next best area for your breakdown trade in crude. If you're here, you'd lock yourself in about a point or so, which is a pretty nice little level. Remember that a point in crude oil is $1,000 on every contract. So if you're able to catch this move from our live trade room on Sunday night, then you're feeling pretty good about it. I would lock in some profits. Now, if you didn't catch it, I think that you've got a nice little level right here. Now, this is a good level when it comes to how the level was created. My biggest problem with this level is the time of day it was created. So I need to remove it because I don't like the time of day of creation. So I'm going to come all the way up to here and wrap my lines right around there. This is the European market open, which is always going to be a better opportunity. Next, gold. Now, this is a good picture of what we call the fair price value area, perspective. And on the 15-minute chart, I liked this little level. I did. Thought this was a pretty good little opportunity in here. Price came into this level, and it should be in purple because it's a 15-minute level. So price came into the level, and then we moved down, and then we popped up through it. But remember, it's a level that we had looked at in the past, right? So 1, 2, 3, 4, 5, and on the 6th candle, we broke out above it, came back down into it, and then popped up significantly higher. But interestingly enough, notice how old supply often becomes new demand, and we just started to use that area. Now that's because this whole region, right? This whole area here is what we would consider our fair price value area. It tends to be a magnet for price, right? Well, now when I'm looking at this fair price value area, I've got to see, okay, where is it coming the next time through? Well, we've got a potential for a break up above this line here, right? So there's potential for a breakout to the upside above this area here. So that's one. However, I'd need basing in front of the level. The other piece to consider is down in here, we've got a little drop base and then a nice rally. Now, the thing about this is this was formed right around the Aussie markets open, and gold has strong correlation with the Australian market. So the gold and the Aussie tend to have decent correlation, so this may be a decent reversal point. Remember, 15-minute chart, lower degree of probability, but it might be one that's worth looking at today as price gets there. If it bases in front of the level, though, remember what the kiss of death looks like. All right. Next, bonds and currency markets. I didn't even look at these yesterday. I was kind of running out of time. In our bond markets, we are still chopping above our area of demand here. We had taken a look at this level here. We had this level in play, pulled it off because of the basing in front of it. It actually turned out to be a pretty nice little demand area. So let me know if you wind up taking that trade anyway. Moved the demand area down to here. We're also coming close to a gap fill area. Now remember that if you're doing the gap fill, you do have a lower degree of probability because you're shorting in the context of a bigger picture upward trend. Now it's an upward trend that is weakened and our momentum has weakened, but it is lower probability, but I at least want to point it out. Next is the Aussie. So we're still in between two levels in the Aussie, although getting a little closer to this one. Be aware of basing before the level to see if there's any weakness that shows up in here. In the euro, so in the euro we have, let's go to our 4-hour chart here of the euro. The euro we have, as Charlie put it yesterday in our daily market commentary, it's a little bit of bullish, bearish, bothish, but I'd say it's more to the upward side at this point, right? So I'm going to look for good reversal opportunities. Well, the problem is that my next good reversal opportunity would come into play not until down in here. This would be my next strong reversal opportunity. Well, if we make it down to there, let me just draw that out here. If we do indeed make it down to here, then my 4-hour is going to look different. my 4 hour is now going to put in a lower swing low and a lower swing high, which means that this may not be a good opportunity at all. And so this is a speed candle on the 4 hour chart. Speed candles tend to get retraced. And so that retracement of that speed candle has already occurred at the 50% mark. So we've retraced 50% of that level. Question is, are we going to retrace more? So if you're more aggressive, this is for you guys that are out there that are a bit more aggressive and you see what you want, you're willing to jump in and take it, you have a level up here that may be a short opportunity. Remember, it's on a 15-minute chart, and it's a more aggressive style. Okay, but that one is a potential. Canadian dollar, so the Canadian dollar, we had talked about this little pennant pattern that was forming, and it broke out to the upside, got a little movement, but then really didn't go anywhere. So we said it's probably best to just close out because it's not doing anything, and then fizzled out and came back down. Still holding off on this one on the retracement to the speed candle to see if indeed we make it back to there. Let's see. Last but certainly not least is our Great British Pound and Japanese Yen. The pound, we are getting a potential for a breakout above this area here. We talked about this one earlier in the week. We are basing just a little bit before it, so keep an eye on this one today. It may be one worth looking at and worth taking. And then the Japanese yen, what I talked about the other day, stay away and don't try to jump in on this one if it doesn't fit your rules. And that's simply because the 4 hour is very, very tight and very wicky, if you will. We have come back close to the gap fill area. Didn't quite fill that gap, and it's starting to move down from that area, even though it didn't quite fill the gap. And so, I don't really want to take the gap fill level anymore because we came so close to it, unable to fill it. So it would be more of a confirmation short anyway. So I'm going to let this thing be and not really add much to this one. So those are our levels for today. Remember that we are tomorrow on our live trade room, so feel free to join us. Go to tradersarmy.com and you can join us tomorrow. If you've got questions, send us an email, support@tradersarmy.com. Until tomorrow, everybody, I hope you have a great trading day, and I will see you soon.